Fine, sir. Fine, sir. Thank you.
Very fine. Thank you. Very fine. Thank you. I am very sorry that we are starting this late. We had network challenges on my side due to load shedding, but I take it that we will be able to cover the lost time. I understand that we are scheduled for LPAM, Legal Practitioners Accounts Management. Are we all ready for this interesting and or exciting course? Can you all hear me?
Yes, we can hear you.
We can hear you.
Yeah.
But just a note, I think the notes that you gave, Zukiswa, the first note called we cannot open. The one called exercise giving introduction, we are unable to open that. It says 0 gigabyte.
Giving instructions, not introduction.
Is that the case with everyone?
Yes.
Yes, sir.
Yes, for carrying instructions.
Yes, sir.
Okay, not a problem. She will attempt sending to you again. Thank you for raising that with us. Then it means today we will have a discussion around this, and we will still ensure that whatever it is that you had to see in those notes, you are still able to see and deal with. Is it okay for everyone?
Yes, sir.
All right.
To beg your pardon, sir?
Yes.
Tabo,
Sorry.
I will be in load shedding any moment from now. So it would be good if everything is recorded so that I can check on the notes tomorrow.
The recording has started.
Thank you.
Thank you. Thank you.
Okay. The understanding you need to have in this course is that it is presented to you on the understanding that you are a legal practitioner who has commenced practicing for own account or who intends practicing for own account. The purpose is to give you an understanding of how you will be expected to deal with your books of account as a legal practitioner practicing for your own account. So the understanding is that after your studies here at law school, you will be opening paid practice. And when you do open that practice, you should know how to deal with your books of account. And I take it that this is the aspect that you covered when you were going through your introductory part in the manual given to you. So with you, we will try to practicalize the course to make you understand how these things work out in practice. Can you please mute yourselves or mute your mic so that I do not hear when you do some paging or when you are talking at your end? All right, thank you. As a legal practitioner, you are governed or regulated by the Legal Practice Act and the rules of the Legal Practice Council. Please mute yourself or your mic, please, please. You need to comply with the law in your practice as an attorney or in your own practice as a legal practitioner. And by the law, I refer to the Legal Practice Act, the rules promulgated thereunder, the tax legislation, and any other law that is relevant to your practice as an attorney, FICA not excluded. But what I am predominantly going to make reference to will be the Legal Practice Act and or the rules of the Legal Practice Council. As a way of starting, you need to understand that as a legal practitioner, you are a business person. You are running a business. You are running a business enterprise whose aim is to make profit. But you are different from other business people because you belong to a profession, the legal profession. The law requires that as a legal practitioner, you need to have a banking account. As a legal practitioner, you need to have a banking account so that when you receive money, the money may be kept in a banking account. So as a lawyer practicing for your own account, you need to have a minimum of 2 banking accounts. You need to have a minimum of 2 banking accounts. And the minimum accounts you need to have are 1, the trust banking account, and 2, the business banking account. You need to have the trust banking account and the business banking account. So you need to have 2 banking accounts that you use in your practice. Why do you need these 2 banking accounts? Why not just 1? The reason you need to have 2 banking accounts is that there are instances in your practice when you will deal with funds which do not belong to you. There are cases in your practice when you will deal with money that belongs to other people. You will be dealing with funds which are entrusted to you. So in such cases, you need to know the relevant account that you must use. You need to know the relevant account that you must use. So where you are dealing with funds which do not belong to you, or where you are dealing with funds which belong to other people, funds which have been entrusted to you, or funds that you hold for the benefit of other people, such funds must be dealt with in the trust account. Such funds must be dealt with in the trust banking account. So in the trust banking account, which I said is one of the accounts you should have, you deal with funds which have been entrusted to you. These are funds which belong to your clients or to third parties. So in every case where you deal with money which does not belong to you, or which you are unable to tell whether or not it is yours or it belongs to you, you will deal with that money in the trust banking account. So this is why you need to have a trust banking account. Now, why do you need the business account? Is it not enough that you have the trust account? You need the business account because, as I said earlier, you are a business person. You are running a business as an attorney or as a legal practitioner practicing for your own account. The business account is used to deal with funds which belong to you. These are funds which belong to your own practice. This is money that you have earned when you are paid for work that you have done or for services that you have rendered. The money can be paid into the business account. The money which is in the business account or which you receive and or accept in the business account is money belonging to you. This is money that you can either use or misuse. It is your own money. It is your own money. Whilst the money in the trust account belongs to other people or it belongs to your clients. Perhaps the question you may ask is, how do I tell that this is trust money and that is business money? When you deal with situations or with facts in your practice where money is involved, ask yourself this simple question or questions. If I am receiving money, what is this money for? Or why am I receiving this money? And if the answer or answers are that this is money paid to you for work to be done in the future, or this is a deposit for a service that you are still going to render, then you must know that it is not your money yet. It is not your money. That money still belongs to the depositor. The money belongs to your client. It will only become your money when you have ultimately rendered the relevant service and you have accounted for the service. That is when the money will belong to you. But at the time when the money is paid to you, or at the time when you are receiving the money and you have not yet rendered a service, that money has to go to the trust account. It must be kept in the trust banking account until you become entitled to it. Sometimes you may find instances where you receive money from your client with instructions that you must pay that money to a third party. So because you have instructions to pay that money to a third party, it means that money is not yours. You cannot take it to your business account, because when you take it to your business account, it will be as if it is your money. But because you know that it is not yours, it was accompanied by an instruction that you should pay it to a third party or to another person, that money will be deposited into the trust banking account. And you will then later pay that money over to the third party. So there are a number of questions and or examples you can have which will assist you to check whether funds should be paid into the business account or into the trust account. Like, for instance, when you receive money after having rendered a service, that money is in payment of the work you have done. Because you have already worked, you have already rendered a service, that money is yours. You are entitled to it. And because you are entitled to it, it will be paid into your business. It will be paid into your business account. Do I have questions from you so far? Are we together thus far?
No questions, thank you.
Hi, Tabu. I've just got one question, which is actually a going argument in our office. And it's what you just said about if you've rendered a service and you issue an invoice and your client pays, does client have to pay that invoice directly into trust, or can they pay it directly into business?
They should pay it to business because you have done the work. There is no need to take it to trust.
Okay,
You've rendered your service.
Thank you, Tabu. You've just confirmed my argument. Thank you so much.
You're welcome.
I have a question. May I go ahead?
Yes.
All right. If a conveyancer is doing a transfer for you and he says his conveyancing fees are X, right?
Yes.
Is he entitled to pay the conveyancing fees into his business account long before the transfer even takes place? Or is he only entitled to that after he transfers your property?
Right. In conveyancing transactions, what you will have before the mandate even commences is what is called a pro forma account. When client pays in response to the pro forma account, the payment does not go to the business account. It goes to the trust banking account. The reason it goes to the trust banking account is that the conveyancer has not yet rendered a service or has not finished his mandate. So it will be in the trust account until the service has been rendered. And that is normally until the date of transfer. In fact, in this module, we do have a part that deals with conveyancing transactions. You will see this aspect demonstrated when we deal with conveyancing transactions. But to answer you in short, the money or the payment will go into the trust account. It will stay there until the date of registration, because it is only on the date of registration that we will confirm that the conveyancer has rendered services to the purchaser and or to the seller.
Thank you very much.
I have a question, Mr. Mahave.
Yes.
To me, it seems like each and every money that comes into the base into the firm, if I put that way,
Yes.
it comes to first in the trust account.
Yeah.
Then after our service has been rendered, it goes to the business. So now the question is, when you do the consultation, first the clients come to you and then you give advice before you charge the client, and then you give them the your fee structure. So by giving advice already you have rendered the service, but you have not yet been paid. So
Yeah.
when you give the client account details, those account details, will they be for the business account or for the trust account?
It will be for the trust account because you will not be asking for consultation fees only, not so. For as long as what the client pays covers parts of work which are still going to be done in the future, the money or the payment must go into the trust account.
Okay, a follow-up question: if the client, if you advise the client and the client is satisfied and then they want to pay you now, because now they are satisfied that the service has been rendered, then you give them the account for the business.
Yes. In fact, what you need to understand here is between the payment and the work or service, what came first? Is it the payment that came first, or is it the work that came first? If payment came before the work, trust account. If the work came before payment, then business account. But there are instances where you will deal with what we call composite deposits. Composite deposits occur in instances where your client pays you some money, but the money you are receiving from your client covers parts of work done and parts of work to still be done. So we call that a composite deposit. So because it is a composite deposit, you simply take it to the trust account. Composite deposit from the word combining or combined. So it's payment for combined services, meaning services rendered and services to be rendered. So you take that money to trust. In instances where you are unsure, you may simply take it to the trust account. But you need to know that when you receive payment from client in respect of services you have not yet rendered, that payment has to go into the trust account. But if you receive payment for work or services already done or rendered, then the payment must go into the business banking account. That is the understanding you need to have.
Okay, sorry, Mr. Mahave.
Yes.
Yeah, I just wanted to be practical here. When I approach an attorney, they'll say that you need to open a file with the law firm or the attorney. Yeah, maybe let's say for instance, they say to open a file with us is 2,000 rand. Then you pay that money, open a file. So that money, that first payment, does it go into the business or does it go into the trust? Because to open a file, you have to pay money. Yeah, that's my question.
Right. The question you must ask yourself here is, now you are not the client, be the attorney now. You be the attorney now because the client or your client does not do your books of account. So you are that attorney and you tell a client that For us to open a file for you, we require 2,000 Rand. Now, the question you should ask yourself here is, what is this 2,000 Rand for? I understand that I'm saying that it is for opening a file. But when it comes to the rendering of a service, what am I doing with this 2,000? Is this serving as a deposit for the work I am going to do? Or is it for work I have already done? So this is the question you must always ask yourself. Have I rendered a service? Or this 2,000 is simply a deposit? I want to see if this client will actually afford me. This client will afford my fees. And this is why I'm asking for this 2,000. So under those circumstances, and because at the time of requesting this 2,000, you had not rendered a service, the money will go to the trust account. The money has to go to the trust account because you have not rendered a service and you cannot account for it. Let's say you were to draw a statement of account, which you would in turn send to your client. What would your statement of account contain? What would you say in the statement of account? Will you say opening file 2,000? Or will you simply say a deposit paid 2,000 and you credit that client?
I think that money would constitute a consultation fee.
Sorry?
Yeah, but that is not what you told the client. You did not say to the client that for consulting with you, I'm charging you 2,000. Instead, you said, we are opening a file for you and we require 2,000 Rand. In a way, once you say to the client, we are opening a file for you and you will pay 2,000, you are actually saying to the client, we accept your instructions. We accept your instructions to act on your behalf. And in order for us to continue acting or for us to act on your behalf, please pay us an amount of 2,000. And if you do not pay 2,000, we are not doing any work for you. So that is a deposit. It must go to the trust account, unless you specifically say that for having consulted with you, we require X amount, and the client pays after the service was rendered. Yes.
Sorry, can I speak?
You may.
Can I suggest that you hold off a bit with the questions so that you can at least cover a bit of a portion? Can you request that people write down their questions? So after maybe 30 minutes of you explaining, then they can ask the questions, because now we are going around with questions, but
I agree with you.
Yeah, can you please hold
I agree with you. I agree with you. All right, so that we can also have some progress. All right, let us proceed. So up to now, you understand that you need to have books of account. I mean, you need to have two banking accounts. You need to have a trust banking account on the one hand and a business banking account on the other. What do you do after this? Is it sufficient for you to know that you need to have two banking accounts, the trust and the business banking accounts? No. You need to still comply with the law, which says you need to keep accounting records. You need to keep accounting records, meaning that you need to have books of account. You need to have books of account. What are these? These are books that you need to use in order to record transactions which occur in your practice. You need to have books of account which you will use to record transactions which occur in your practice. In other words, every transaction that takes place in your practice must be recorded. Every transaction that takes place in your practice must be recorded. If you receive money, you need to record. It must appear somewhere in your books of account that you have received money. Likewise, if you make a payment or if you take money out of your trust account or your business account, you need to record this transaction. You need to record this transaction. So it must be known that on a certain date, you received money from a certain client, and that on another day, there is money that you took out of your account and for reasons X, Y, and Z. So every transaction that takes place in your practice must be recorded. There should never be a financial transaction that takes place in your practice without being recorded. Every transaction. For the purposes of your trust account, you will have books of account. And for the purposes of your business account, you will also have books of account. And this is why we say that you need to have trust set of books on the one hand and business set of books on the other. For now, let us concentrate on these two books of account which you need to have. For the purposes of your trust account, you will have a book of account called Trust Cash Book. And for the purposes of your business account, you will have a book called Business Cash Book. So there are two main books that you will have: Business Cash Book and Trust Cash Book. What do these books do? What do these books do? These books record all the cash transactions in your practice. They deal with cash transactions. For as long as there's movement of cash, there's flow of cash, you are either receiving money or paying money out. You need to make use of a cash book. So the cash book you use may either be a trust cash book or a business cash book. Although you also have a petty cash book, but for now, our concentration should be on these two cash books: the business cash book and the trust cash book. By way of simplifying, I say that the business cash book represents the business account in your practice, whilst the trust cash book represents the trust account in your practice. You will remember that the two accounts that we are talking about are opened and operated at financial institutions. So at these financial institutions, when there are transactions taking place, they will record. They will record all these transactions which take place in the financial institutions, insofar as your accounts are concerned. You also have an obligation to record transactions which occur in your practice. Let's give an example. If you receive money from a client in respect of work that you are going to do, we've already agreed that that payment will be made into the trust account because it is for services not yet rendered. It is for services that you are still going to render. And for this reason, the money will go into the trust banking account. But in your practice, this transaction will have to be recorded. And the relevant book in which to record this transaction is the trust cash book. You need to enter this transaction in the trust cash book. But if the money was paid to you after rendering a service, if the money was paid to you after rendering a service, the payment would go into the business account, and the relevant book you would use to record this transaction is the business cash book. Is the business cash book. So what you need to gather from this is the fact that you need to have two banking accounts, the trust banking account on the one hand and the business banking account on the other. You also need to have books of accounts in your own practice where you will record these financial transactions as they take place in your practice. And that for the purposes of your trust banking account, you will have a book called the trust cash book. And for the purposes of your business account, you will have a book called the business cash book. Trust cash book and business cash book. Record financial transactions always, regardless of the figures involved. It does not matter how much you are dealing with. It does not matter whether it is 1 rand or 1 million. It does not matter. The figures do not matter. For as long as that is a financial transaction, please record it in the relevant book of account. Is it making sense? Right. Now, where are we? Where are we? We are now at a stage where we want to know how to go about recording this. We want to know how to go about recording this. How do we record? How do our books of account look like? How do our books of account look like? Do you see my screen?
Yes.
Yes.
What do you see?
The
Blank
LFM.
page.
Yes, sir.
An empty Word document.
You
A Word
see a
document.
All right. All right. So quickly, what I want to show on the Word document is how our books look like. When we say that we have a cash book, what kind of an animal are we talking about? What kind of an animal are we talking about? How does it look like? How does it look like? Right. Firstly, I will take it from how we dealt with it some years before you came, or a few years before you came. We had a writing that looks like this, which resembles the capital letter T. Obviously, with two sides. The debit side and the credit side. So you had a book looking like this with the debit side and the credit side. Or if you like, you can say with the left-hand side and the right-hand side. The left side and the right side. The left-hand side also being referred to as the debit side, whilst the right-hand side is also referred to as the credit side. So you use the debit side when you receive. If this is a cash book, you will make use of the debit side to receive. And you will make use of the credit side when you pay out or when money goes out. So here on the credit side, money is going out, whilst on the debit side, money is coming in. On the credit side, money is going out, whilst on the debit side, money is coming in. Then the question you would ask yourself here would be, because we say that there are two cash books, which one are we using? Is it the trust cash book or the business cash book that we are using? That would be determined by the reason for payment. The relevant book to use is guided by the nature of the transaction, or it is guided by the reason for the payment. If it is money you are receiving, into which account are you receiving it? What is it for? If you are paying it out, then it will be from which account are you making a payment? Let's say it's in our previous example where we said that a client comes to see you and gives you some money for you to assist them in a litigation in the future. They give you a deposit of 10,000, for instance, and this money comes from a client called Tatana for a service to be rendered. Which book are we going to use?
Trust.
Trust cash
Why?
book.
Because you are going to render the service in future. They'll give you a deposit.
Yeah.
Services yet to be rendered.
Services yet to be rendered. We've not yet rendered a service. So it means you will come here and open an account. Hello, are you saying something?
Apologies, sir.
Yes, okay, it's fine. So you will come here and name this account, Trust Cash Book. Trust Cash Book. Now, looking at the notes I've written up here, on which side will we record this? Will we record this payment we are receiving, let's say 10,000? Do we record it on the debit side or on the credit side?
It will be on
Debit side.
Credit side.
Debit side.
It will be on the debit side. Why debit side?
On the debit side.
Money received.
Because you have received.
Yeah,
Money.
right. So we will record it like this. 10,000 on the debit side, because it is money that we have received. So if anybody comes to inspect your books of account and finds this recording here, that person will understand that you have. Can we mute ourselves, please? All right, so if anybody comes to inspect your books of account and finds that on your trust cash book, you've recorded on the debit side of the trust cash book, the names of your client there, Tatana, and the amount given there, that person will immediately understand the fact that on a certain date, you consulted with a client and that client gave you the sum of 10,000 rand for work to be done. And this is why you have made use of the trust cash book. Does everybody understand this?
Yes, sir.
Yes, sir.
Yes, sir.
Right, right. So, in bookkeeping, we have what is called dual entry system or double entry system. Dual entry system or double entry system simply means in a transaction, you need to record twice. You need to record that same transaction at least twice. Or where you are debiting a transaction, you also need to credit somewhere. Or where you credit, you must also debit. In simple terms and in our setting as attorneys, when we receive a payment from a client, we need to open a file for that client so that we can credit them. In our case here, after receiving 10,000 from our client, Datan, and after debiting the trust cash book, we need to open an account for our client, Datan. We need to open an account for our client, Tatana, in trust. We need to open an account for our client, Tatana, in trust. And this is what we do. Tatana in trust. So, on our client's account, we do the opposite of what we did in the trust cash book. We debited the trust cash book because we are receiving this payment from our client. But when we go to our client's account, we don't do the same thing. We don't debit. Instead, we credit. And the reason we credit is so that it may be shown that what we have received in the trust cash book actually belongs to our client, done. And this is what we will do. We record on the credit side of our client's account and we say trust cash book, and we record the same amount, 10,000. So this is how we record the receipt of payment. When you receive payment, you debit the cash book and then credit your client or the person who is making the deposit. Is it making sense?
Yes, sir, it does.
Yes, sir. Lot
You
of
will
sense.
use-
So far, yes.
Okay. Let's say on this same matter, Tatana instructs you to pay a tracing agent, and you pay the tracing agent 200 Rand. How do you make this payment? Considering that when we received payment, we debited the trust cash book. Now we want to make payment. How do we do this?
You would credit the trust cash
Must go
book
to
and then
credit.
debit the account.
You debit instead of that.
Yeah, excellent, excellent. We will credit the trust cash book because money is going out. We credit the trust cash book because money is going out, and it is going out of the trust account. Then after recording, so we will do something like this. Paid tracing agent, 200. And then we come to Tatana's account in trust and we debit it. Trust cash book, and we record 200. So this way, we have paid the tracing agent on behalf of Tatana the sum of 200. And in demonstration of this, we debited our client's account in trust. So we paid a disbursement out of the trust account. Is it clear for everyone?
Yes,
Yes.
sir. Yes,
Right.
thank you.
Right. So
Sir, sorry.
yes.
The your debit and credit on Tatana's account, they are on the same line. Which if we have to put dates there, the date will be one line. If you maybe can put the trust
Okay. That would not be a problem. Let's say like this.
Yeah.
And this we had received, say, on 19 February. Yes, this would not be a problem. Remember that this is what I say was in use immediately before the development of the material you now have and use? Do you follow?
Yes, I do follow.
Yes.
Yes. Yes. Okay. The reason I first show you this way is so that you may understand when you come across previous question papers, because before now or before that manual which you have, this is the system which was in use. Do you understand me? Hello?
Yes, sir.
Yes,
Yes.
we
understand.
Yes.
This is the system that was in use, and so far you do not have previous question papers in line with what you have in the manual. You understand me? So I am showing you these so that in the event you want to prepare and you make use of previous question papers, you may understand how this position is set out. I will also show you how your current manual reads. It's not so much of a difference, it's just the layout that differs a bit, but you still have a debit and a credit. It's just that you have these items following each other or one another, rather than having items on the debit side and on the credit side. Is it making sense to you?
Clear.
Yes.
No.
Yes.
No.
All right. It's fine. It's okay. So let's now tackle it the way that it appears in your manual for the better understanding of those who first went through the manual. Are you with me?
Yes.
Yes, sir.
Yes.
Yes, sir. We are with you.
Right. Right. I want to show you how a cash book and a ledger will appear in your manual. I'll just omit the column dealing with dates. In your manual, you have something like this. You'll have something that looks like this: particulars or details, and then debit, credit. Let's translate our cash book here. In the manual that you have, you'll have something that looks like this. It will be Tatana. Tatana, and then 10,000. And then next, you will have paid tracing agent. $200. And this is still a trust cash book. Do you see how a cash book looks like today and in line with your manual, and how a cash book looked like immediately before the current manual?
Yes, sir.
It's easier this time.
Yes, sir. I think that
Which one is
the
easier?
cash book of today is more simpler than the
Yeah,
one of the previous one.
exactly.
Okay.
Yes.
Okay. Oh, so today's one is easier than the previous one.
Yes,
The-
it makes more sense.
Yes, sir.
Because your transactions are just following each other.
Correct.
Yes, sir.
Okay, so does everybody understand the difference between these two cash books, the layout? Do you see that what is making these two books different is the layout? The fact that the old one has, or it's in the form of a T, whilst the new one, it's just columns, it's just a table. But the content is still the same. When you receive in a cash book, what do? You debit. Do you see? The same thing. But when you make a payment or when money goes out of the account, what do? You credit. The same thing that we were doing even in the past, but the layout is different. Is it making sense?
Yes.
Yes, sir.
Yes, sir.
Yes,
sir.
yes, it makes sense.
Right. Likewise, if we were to draw Tatana's account in trust, we would do the same. Tatana's account in trust would take the same form. It would be like this. We would have Tatana in trust.
Yeah, how so said?
So in Tatana in trust, what would we have? We would have this trust cash. Please mute yourself, madam.
Guys, may you please mute yourself?
Please mute yourself. Particulars, debit and credit. So we would have this same thing. Would say here trust cash book. On the debit side, we would not say anything because this was money credited to the client. So instead, we would credit. So we would credit 10,000. And then we go to the next item being the payment of the tracing agent. Being the payment of the tracing agent. And how were we going to deal with these? We would simply take it from here and then we no, not here. Not here. On the client's account, we would have something like this. And then we would debit. We would debit Tatana in trust. Okay, for easy view, let me do this. Let me put this down. So do you now see how your client's account appears?
Yes, sir.
Let's start first with the trust cash book. We received 10,000 from Tatana. After receiving the 10,000 from Tatana, what did we do? We debited the trust cash book And then we opened an account for Tatana in trust, which we credited with the 10,000. And what happened next? What happened next is that we paid a tracing agent 200. And how do we know that we paid a tracing agent? Because we credited the trust cash book. From here, we went to Tatana's account in trust to show that we actually made use of our client's money to pay the tracing agent. And here it appears on the debit side. And our narration is trust cash book, 200 debited. Is it making sense?
Sorry, sir, may I ask a question?
Yes, you may.
Yes, sir. I just wanted to find out if in an exam I use the previous layout, will I be credited, or is it a problem? Thank you, sir.
We will not penalize you. We will
Thank
not
you.
penalize you for that, but I advise that you should start getting used to the new system.
Thank you, sir.
You should start getting used to the new system. And like I've said to you earlier, we don't have memoranda yet on the new system, because this manual, we actually started using this new layout this year. We started using this new layout only this year. So it does not have previous question papers yet, or it does not have previous memoranda yet. But I advise you that you need to start getting used to this new system. And I would advise that when you answer, you may need to use this new system. But if the old one works for you, you can also use it. But I would advise that you make use of the new system. I've shown you the old one just so that you get to understand how things were done, and just so that if it is easier for you to understand that way, you can just use it to assist you going forward. But like you are saying, the new system also looks like it's easier, so you can just use it. What makes it easier is the fact that you simply list these transactions as they come. You just list them, but then knowing which one to debit and which one to credit, depending on the nature of the transaction. Is it clear for everyone?
Yes, sir.
Okay.
Yes.
All right.
Yes, sir.
Right. Now,
Yes, it's clear.
okay.
Can you please scroll down to the account that was open for the client, just for me to see there? So basically, it means that on the trust cash book and on the account that you open for the client, the amounts would be put on opposite sides.
Yes.
Okay.
If it is debited in the trust cash book, it will be credited in the client's account. If it is credited in the trust cash book, it will be debited in the client's account.
Okay, and then the particulars would basically serve to inform what kind of a transaction happened. So in terms of particulars, it will be the same thing that you put for the same transaction, both in the account that is open for the client and in the trust cash book.
Not necessarily.
I mean, per transaction. I'm referring now to each transaction. I mean, for example, the transaction for paying the tracing agent.
Yes.
I can't imagine under particulars that definition being different from one chart to the other. It has to remain the same because you are defining the transaction that took place, isn't it?
Okay. Look, for instance, in the trust cash book.
Okay.
We say paid tracing agent. Do you see?
On the yes, I can see that.
Right. But when we go to Tatana in trust, what do we say for the same transaction?
trust cash book.
Yes. So the trust cash book will explain the transaction. The reason we do this is so that we can link these two accounts to actually show that this transaction corresponds with what is happening in the trust cash book.
Okay, so what
And
this
that,
means is
sir?
in the account that was open for the client, it must show where the transaction took place.
Yes, it must show where it actually comes from. Yes.
Yes. Thank you so much.
Yes. You are welcome.
And that, in Tatana in trust, when it says cash book, that's referring to the amount in the trust cash book. So it draws your attention to the trust
To what
cash
happened
book.
in the cash book.
Yes, it draws your attention to the trust cash book. So you look at the amount in Tatana in trust, and you look above for the trust cash book.
Yes, yes.
Mr. Makhabe, can we please go back to the initial agreement that we hold off questions a bit? You jot down your question, and then when the floor is open for questions, you ask your question.
It's okay. All right, now let's proceed.
I'm sorry, sir. I'm sorry to interject. I think we should allow because people learn differently, and sometimes it can be very confusing if there are 7 steps that we have went through and one does not understand them, and then at the end one tries to now reconcile all the questions. Maybe we should just allow you to go about it the best way you see it, because that method might be working for that
No,
lady.
don't worry. From time to time, I'll allow questions here and then. Remember that this slot was actually opened by me. Once I introduce something that is new and which I see is likely to confuse you, I allow you to raise issues there so that we can discuss and pass.
Thank you, sir.
Okay. All right.
Can we have a 5-minute break?
We can, not a problem. Can we come back at 4:15?
Yes.
Maybe we should be using that break to ask questions.
Let everyone.
Sir, some of us have load shedding at 8 p.m. Is it possible to just push through and have a break after? Or ask questions rather at the end of the lecture?
We don't want to miss anything. We want
Different
But
people
you
have
see,
got different times for load shedding.
Yeah, and others may be calling for these breaks because of serious pressures of nature.
Exactly.
Which we may need to respond. Yeah.
Let's go for it.
Yeah.
Serious pressures of nature.
All right, let's come back at
They have to relieve themselves.
Yeah. All right.
Hello?
Hello?
Nobody's gone to the nature yet. The toilet.
Not yet.
We're still waiting to return.
You're still waiting.
Or we can just discuss the.
I like this lecture.
Or we can just
you got a sense
discuss
of
in the
humor.
meantime. Hello?
Yes,
Yeah, we can
yes. Those who have got the
Yeah. Like
those who've got accounting background, why when we credit and debit, we don't write balances to say we credited the tracing agent 10,000. Now balance for Tatana is 9,800.
The account is not closed off, guys.
Yeah, that sounds like a
the
good
account
idea.
is not closed off. Colleagues, the account is not closed off. Only when it's closed off do you do
Yeah.
that.
Yeah, I think you only balance it like right at the end.
Yeah,
Because
when you
you're going to
closed
keep
off.
doing transactions.
It's
You have to keep
ongoing
that account
transaction,
open.
yes. Yeah.
Yeah.
Oh, okay, thank you very much.
I wanted to hi guys. I wanted to link the 200 rand under the trust cash book and under Tatana's trust account. Guys, do you hear me?
You're too used to cashbacks, eh?
We
got loyalty cards. You're too used to cashbacks.
We hear you.
The trust cash book.
We hear you. Yes,
Tatana's trust
we hear
account.
you.
I want to link the 200 rand of those two accounts. So in the trust cash book, it's a payment,
my
right?
name is Raymond.
Yeah.
My name is Raymond. I wish to attempt and answer you as my colleague. However, I first need to say that
Hello, Raymond.
when we speak, all of us uncontrolled, we are not going to make any progress. Your answer, I wish to say the simple thing. The cash book, it is like when you've studied accounting, you have the cash receipt and cash payment. They are separated. Now, everyone who gives you money or you pay to, you are welcome to open a specific account for them. For instance, when you say rental, you can have an account specifically for rental because this is something that you do continuously, probably every month. So you can see how much rental you receive if you receive it or how much rental you pay. So you monitor it in that, and that is called ledger. Those are your ledger accounts. And your cash book, the name cash book is being simplified for us as lawyers. If you go to accounting practitioners, they deal with it in cash receipt and cash payment. Are your books of first. These are your first books. And then you can even do it vice versa if I'm not misleading you. You can start with your and know how much rental, if you are renting out, you've received, how much you've paid. So what you have paid in ledger, you must have received it in the other account. So if you pay money in payment or cash book, yeah, if you are within the line of what I'm trying to assist my colleague, or I will shut up. But if you've paid something, then in that account, that means that account has grown. That specific account has grown. If it is rental, that means that account is growing. You've been paying more and more. At the end of the year, you will be able to realize how much you've been paying for rental by looking at that ledger account and that ledger account only. That is my just 2 cents of assistance. Thank you.
Yeah,
Thanks,
so
Raymond.
basically you can open another account for the what was
do.
Was it
For any account, you
paying?
can open an account for anything. That so
I'm
long as
saying
it
in the example,
appears in your cash
that
book.
200 rand was for something.
Yeah.
So you can record that in that account and then credit the
No, you can't.
book.
Because this is Tatana.
No, I'm
This is
saying.
so the only
I'm
person you
saying
can open an account for is Tatana.
Listen to what I'm saying, please.
For the
I'm
tracing
saying
agent.
that money, that 200 rand, you are paying someone for that. So there should be an account for that person. Do you get what I'm saying?
No, it's not you. It's not you. Who's paying? Remember that who's paying. Can you see the difference? Only if it was in the business If it was in a business cash book, you are using every time. That every time you see,
you need to mute.
You can do that.
Yeah, this agent's account will be opened if it was what coming out of the business account and the attorney in question.
My colleague, this one is not coming from our business account. It is our client who's paying this from the trust account.
Yes, that I
So if we
understand. We're saying
remember that the trust account is not our
was coming from the business account, then an account would be opened for such aid and then would be on a basis. But now because it's coming from a trust account where it's the client that's actually paying, giving us an instruction, so we can't open the account aside.
I agree with you, my colleague.
Thank you, sir.
But if it was coming from our business account, we can open anyone's special limit. But if it is coming from trust, every client pays for his dues.
Colleagues, you must just imagine that you have some money under the one mattress in the house. Né? That is the trust account. Then on the furniture, you have other money. That is the business account.
In Palapala.
Are you referring to Ramaphosa? People are putting money in his mattress.
Is everybody back?
And make it look like it was a house robbery.
Yeah, that's
Are we all
exactly
back?
what he thought.
Okay, we are
Yes,
back.
Yes, sir, we're back.
We are back.
Yeah, is everybody here?
Yes, we are
Yes,
here.
we
You
are.
can proceed.
We are
Yes,
here. Can
okay.
we start?
Yes, sir.
So we were discussing our president getting money under his mattress. Maybe it was a tooth fairy.
No. We're here for Tatana, man. Leave the president.
As for Tatana.
Hello.
We are here.
Hello.
We are here, sir. We are here.
Hello.
Take one, take one. Second, yes.
Hello. Mahaba. You can go ahead, sir.
Yes, we can hear you.
Mr. Mahaba, proceed. Thank you.
You can proceed. Thank you.
1, 2, 3. Testing 1, 2, 3.
Tatana must pay another 200 to trace the lecture.
Aloha.
The break is no longer 5 minutes now. It's taking more.
So guys, can I ask a quick question here? More the account Tatana in trust, that transaction here, $200 that was debited. The narration is there. So for all transactions,
A lost signal.
Can we please
Hello?
allow the lecturer to get back in and then you can ask your questions later on? The lecturer is trying to get back in. These sessions are being recorded. Can we give him a chance and then you can ask your questions later? Thank you.
Are you implying what was the reason why you can't log in? Is that what you're saying?
That's what you are saying.
Serious.
Sense of humor, colleague. Sense of humor is very important. Very important.
Hey, we have a Donald Trump here in our midst. A female version of Donald Trump.
All right.
Are we there?
Is everybody there?
Yes.
Yes, sir.
Yeah, may you proceed.
Fine. Let's proceed. Let's proceed. I see that from time to time we have network issues. But let's proceed. Do you still see my screen?
No.
No, it's not visible. No, sir.
You still don't see it?
Yes.
No, we do now.
You do now.
Yes.
All right. Let's proceed. Let's proceed with the same example I gave earlier, or the same example we were working on. Let us say another client walks in and gives you a deposit for you to do some work for them in the future. Let's say this client is called Kokwana. A client called Kokwana walks into your office, consults with you, and gives you instructions to do something for them in the future. And you ask for a deposit of 50,000, and Kokwana gives that to you. How do you deal with this?
Trust cash book.
Trust account.
You will take the trust account, and the relevant book you will use is the trust cash book. So, like I said to you, you need to get used to the new system. So from now on, we will get rid of the old system. We will make use of the new layout. Not so.
Yes.
So you will come here. You'll make use of the same trust cash book, and you will record Kokwana. And this is the name of this client, Kokwana. How much is Kokwana giving you?
50,000.
50,000 debit.
Do you debit or do you credit?
Debit.
Debit.
You debit it. Why do you debit this 50,000?
We are receiving the check.
Because it's money received.
Because you are receiving it.
Yes.
From here, where do you go? Is this the end of the matter?
No.
No.
Where else do you go?
We open the Kokwana
You
account.
open the data account.
Open a Kokwana's account.
Right. You will open an account for Kokwana.
Yes.
In Trump, not so.
Yes.
Yes.
Right. You'll open an account for Kokwana in trust. Open an account for Kokwana in trust. Particulars, debit.
And you credit.
Right.
We will credit.
Right. So under particulars, what do we say?
We say trust cash book.
Trust cash book.
Trust cash book. What else do we do or say?
You credit it by the amount.
We credit
the amount.
We credit 50,000 rand.
We credit 50,000. Why do we credit this 50,000 on Kokwana's account in trust?
Because it's money out.
Because
It's money out of Kokwana's account.
It's money into Kokwana's account.
Yes.
Aha, it is money due to Kokwana. We have received this money in our trust account, but to whom is it due? It is due to Kokwana. Remember that the money we have in our trust account is not ours. It does not belong to us. It belongs to our clients. And in this specific case, our client is Kokwana. Do you follow?
Yes.
So it does not matter how many clients you will interact with in your practice. It doesn't matter how many clients you'll end up dealing with, for as long as you receive money which does not belong to you, or money in respect of which you are still going to render a service, that money has to go to the trust account. Do you follow?
Yes.
Let's say another client comes by the name of Vazaya. Vazaya consults with you and gives you instructions to assist in a divorce matter. Vazaya wants to divorce his wife, and he gives you a deposit of 20,000 for you to assist them in the matter. Where do you go with the money?
You go to trust cash book.
You go to the trust cash book.
Yes.
So the trust cash book, you will record under particulars, and you will say, Vazaya. Vazaya. How much?
20,000.
20,000.
20,000. Do you debit or do you credit the trust cash book with the 20,000?
Debit.
Debit.
You will debit the 20,000. And why do you debit the 20,000?
Because it's money that
You
is
received
received.
Because you are receiving it. Now, after recording on the debit side, does it become the end of the matter?
No.
No. What else are you required to do?
We need to open Vazaya
Trust account.
Vazaya Trust.
So we will need to open an account for Vazaya in trust.
Vazaya.
So we open an account for Vazaya.
That's like a villain's laugh. Like a villain.
Guys, can you please allow the lecturer to speak? We are not here to play, guys. Please.
Particulars, debit, credit. Right. Under particulars on
We be chilling.
What do we record?
Chilling like a villain, chilling.
Cash book.
Trust cash book.
Trust cash book.
Right.
On the
Debit or credit?
We credit.
Credit.
We credit. How much?
20,000.
20,000.
20,000. And why do we do this? Why do we credit?
Money due to Vazaya. Money due to
This is
Because
money.
it's money due to
belonging to Vazaya.
Yeah. This is money which is due, or money which belongs to our client or
Where y'all?
All right. So this is what you are expected to do when you come across trust transactions, or generally transactions in your practice.
Okay.
Let us say, for argument's sake, you take out 100,000 from your personal account into your business account in order for you to use as capital. You want to use this 100,000 to start a practice. How do you record this?
You go
That's money coming into
your
open a business cash book.
business account.
Right. So it is money coming into your business. It is money coming into your business. So the relevant book you will use is the
Business cash book.
Business cash book.
The business cash book. The business cash book. And how are you going to record this in your business cash book?
Gonna record it on the
We debit it. We debit it.
What do you say?
Yes.
It's a I think you're credited.
We debit it.
So under particulars, you will say capital, because this is what you want to use this money for. Do you follow?
Yes.
Yes.
You want to use this 100,000 as capital or as startup capital. This is what you want to start your business with. So you are receiving it in your business account. And because you are receiving it in your business account, you will debit the business cash. You follow?
Yes.
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 What else will you do here?
Gonna open a capital account.
Sorry to disturb. Some of us we can't see anything now. It seems like your screen is stuck or something. We can't see anymore. It's like we are just seeing the Microsoft thingy. We can't see like your thingy, like you doing the accounts and
on our side.
We can see. We can
Probably
see.
your side. We can see.
We can see.
It should be your network.
Some of us can see.
I can see.
It should be your network connectivity.
Try to log off and come back.
Just log out and log in again.
Yeah, you can log off and come back. Maybe.
Yes, you simply log off and log on again. Yeah. I think it should be issues connected with network.
Yeah.
Okay. All right. Can we proceed now? We have recorded on the debit side of the business cash book the fact that we have received 100,000 as capital. What else do we do?
We open a capital account on the business account.
We open an account for capital in business. Right. We open an account for capital. And what are we going to do on this account? Yes.
Credit.
We are going to credit
Business,
100,000.
business cash book, credit.
Particulars.
Particulars.
Debit.
Credit. Yeah.
I see you like this new layout compared to the old system, not so?
We love it.
Yeah.
Yes, sir, we do.
You love this one.
We love it.
It's easy. It's easier. Right. Business cash book will be your narration. And you say that we will record this on the credit side, where we will pay 100,000.
Yeah.
So, because the business cash book was debited, the account for capital will be credited.
Yes.
Is it easier this way?
Yes.
Yes.
Yes, sir.
Okay. All right. It's month end now.
Much easier.
It's much easier. Hello, somebody said something about easier.
Yeah.
Very easy.
It's very easy.
Yes, very easy.
Very much easy.
Not
Excellent.
too complicated.
Not complicated.
Yeah.
Excellent.
Yes, not at all.
Can we follow Tatana here and say capital in business?
Well, you can do so, but we know capital can never be in trust. Do you hear me?
I hear you. I hear
Yeah.
you.
If you like, you can say capital in business, but at the same time, we know that capital can never be in trust.
Exactly.
Yes.
Do you follow?
Yes.
We do.
Yes.
Okay.
Capital business.
Let's take another example. it's month end.
Yes.
You pay salaries totaling 25,000. From which account do you pay?
Business cash.
Business
account.
From the capital.
So you
Yeah,
pay
from the business.
salary from the business account.
The business cash
Yes.
account. Yes.
Yeah.
Why not from the trust account?
It's not your money.
Because
The
money
trust is not your money.
yours.
Belongs to the client.
So you cannot pay operational expenses of your business from the trust account.
Yes.
Because the money in the trust account does not belong to you. It is not your money. You can only pay operational expenses of your business from the business account.
Yes.
Yeah.
Yes.
Then it means we will go to the business cash book, and under particular, we will say paid salaries or simply salary. Do we debit this or do we credit this?
We credit.
Credit.
We are paying.
We credit. How much?
25,000 rands.
25,000.
25.
Yeah.
Why do we credit the business cash book?
Because the money
is going up.
Because the money is going out.
Yes, because money is going out of the business account. So we credit the business cash book. Is this all we do? Where else do we go?
No.
You go to capital account.
You go to
capital account.
Because capital is dropping.
Okay. So this is where we go. We will open an account. We open an account for salary. We'll open an account for salary. Is this complicated?
No, not really.
It's not.
So, I think it's not complicated, but with the kind of examples that you are providing, it's also going to shed some light.
It's going to do what?
I'm saying with the kind of examples we are providing, it's also going to shed some light, because at least you get to see as to how does one approach a different kind of a questioning.
Yes. Excellent.
Yes.
Right. So under particulars in the salaries account, what do we say?
Business cash.
Business cash.
Right. Do we debit or credit?
Debit.
Debit.
We debit. Why do we debit?
Because the salaries are coming in.
Because the salaries are coming into the account.
Yes. And also because this debit entry on salaries correspond with the credit entry on the business cash book. Not so.
Yes.
Yes.
Yeah.
Correct.
Okay.
Remember, we spoke about dual entry system in bookkeeping, or the double entry system.
Yes.
Each time you debit, you must also credit.
Credits.
Yeah.
Can I ask, why is it that on the business cash book you put for the salaries you put 25,000 rands on credit?
On the business cash
Because it's something you were not receiving.
I'm asking the question to the lecturer.
Yeah,
Do not answer me if you're not the lecturer.
We know the answer, boss. We know.
Okay.
Students know the answer.
Okay, no problem.
No, guys, you are
We
annoying.
know the answer.
Okay,
No, but please give the other guy a chance so that he can understand,
Can we
guys.
behave?
And I'm asking you, the
Lecturer,
lecturer,
answer, please.
the lecturer. I'm asking you to take charge of this class.
Yo,
You
there's
are
serious chaos
allowing
in this room.
you are allowing
There's
people
serious
to
chaos.
too much in this class.
Like seriously, everybody is speaking. We can't hear who's saying what. There's too much chaos. It's chaos, guys. Let the lecturer answer, please.
Too much chaos.
Yeah, it's chaos.
What we could like what?
All right, mute yourself unless you have a question or something to
Like we're in
say.
Parliament now.
Yes. We paid a lot of
Order.
money. If they don't want to
Okay.
attend,
So your question was, why do we credit the business cash book with 25,000? Have I captured the question correctly, sir?
That's correct, sir.
Yes. Because we are taking money out. When we pay salaries, we are taking money from the business account. That money goes out. And we said that insofar as our cash books are concerned, when we receive money, we debit. But when money goes out, we credit. So by crediting, it means this 25,000 is going out of the business cash book. And the reason that it is going out of the business cash book is because we are paying salaries. It's because we are paying salaries. This is why this money is going out. And in order to comply with the dual or double entry system of bookkeeping, we debit salaries. We debit salaries. Is it making sense for everyone?
Thank you, sir. Yeah.
You are welcome. All right. Does everybody understand this recording on salaries?
Yes.
We do understand.
Yes, sir.
Okay.
Sir.
All right. Let us take it further. Remember, we said it's month end. We said it's month end and we are paying salaries. Let's say we also pay rental. We also pay rental.
Yeah.
And our rental amount is 10,000 excluding that. Our rental is 10,000 excluding that, meaning that in total you are paying 11,500.
Please move the screen.
Guys, please mute yourself.
Can you please mute yourselves? All right. So we pay rental in the sum of 11,500. We pay rental in the sum of 11,500. From which account do we pay this rental?
From business account.
Business account.
From the business account. Why not from the trust account?
No, because it's the client's money, not your money.
Not our.
To do with the business.
Not the business.
To do with the business.
Because this is it's an operation of the business, not so.
Yes.
Correct. It's a business transaction.
Yeah.
Yeah.
We cannot use money in the trust account to pay rental. Do you follow?
Yeah.
Correct. We can't. We can't. So we need to pay from the business account. In other words, we need to make use of our own money to pay rental. Is it making sense?
Correct.
Yeah. Yeah.
How do we make this payment? Do we debit the business book or do we credit?
You credit the business account.
Yes, we credit the business cash book. And by crediting, what does this mean? It means money is going out, not so.
Correct.
Right. So we will go to the business cash book and under particulars, we will say rentals or paid rent or rental.
Yeah. Okay.
Right. Then you say that we credit, and I agree with you because money is going out. And how much did we say it is?
11,500.
11,500. We've credited
500.
Yes, we've credited the business cash book with 11,500 because money is going out of the business account. We are paying rental, and this is the reason we have recorded under particulars in the business cash book. Is it making sense?
Yes.
Is this the end of the matter?
Yeah.
No.
No.
No, we have to open.
We open
a
the
rent
account for
Open
rental.
another account of rentals.
Right. So here, there are two accounts we are going to open. First, we will open an account for rental, and second, we will open an account for VAT input. Remember that we were told that this rental amount is VAT inclusive.
VAT inclusive, yes.
Yeah.
Do you follow?
Yes.
But if the instruction simply says you pay rental of 11,000 or of 12,000 with no VAT implications, it's fine. You will simply credit the business cash book and then debit the rental account.
Okay.
Yeah.
But where it is said that the amount includes VAT, so you must determine the VAT included here.
Yeah.
Do you follow?
Yes.
So we'll open two accounts here.
Okay.
The first being the rental account. The rental account. I hear a child crying.
Yes.
The assistants.
Or their assistants. Right. And then we'll have another account for VAT input. All right. So it will also have its particulars, the debit and the credit.
Sir,
Yes.
can't you say VAT input and VAT output, or must you use debit and credit?
We will know once it is debited, it's VAT input. Once it is credited, it's VAT output.
But may you use VAT input and
Yeah,
may
you may do so. You may do so. You may choose also to simply have this one where you simply say VAT input as a heading, and then you can still have another where you say VAT output if there's a possibility or likelihood in the future that you will record VAT output.
Thank you, sir.
But you need to record correctly. VAT input will have to be debited and VAT output will have to be credited. Do you follow? All right. So on the rental amount, what do we say? On the rental account, what do we say under particulars?
Business cash book.
Business cash
book.
Yes, business cash book. Yes. Debit or credit?
Credit. Debit.
Debit, how much?
11,500.
Not 11,500 minus the VAT, sir.
Yes, that is so. You need to determine VAT input and extract it from the total amount.
10,000.
Okay, and for those of you who may not have an idea on how to determine VAT input, simply do the following.
Yes.
11,500 multiplied by 15 divided by 115. This is how you determine VAT input.
Divide by?
Come again?
You say 11,500 multiplied by 15 divided by 115. What do you get?
1,500.
10,000.
1.5.
What do you get? 1,500.
500, yes.
Right. If you minus the 1,500 from the 11,500, what are you left with?
10,000.
10,000.
So it means rental is actually 10,000. What makes it 11,500 is because of the VAT you pay. Do you follow?
Yes.
So on the rental, you will debit 10,000. And then you go to VAT. So on the VAT account, what do you do?
We debit 1,500.
So you will debit 1,500 under VAT.
Yeah.
Yes.
This will be VAT input.
Yeah.
So do you understand how we dealt with the payment of rent with VAT?
Yes, sir.
Yes, sir.
Can I ask a question?
Yes, you may ask a question, sir.
Okay, because
So
there's
can
something
you
that I
repeat
realized
how
I need
to determine that? Do you times it by 15?
Yes, you multiply it by 15 and divide by 115.
115.
What?
Yeah.
115.
Yes.
Yeah.
Yes.
150.
Can I ask a
All
question?
right. Can I ask a question now?
Yes.
Would I be right? Because what I see, the VAT input along with the second account, which is rental in this instance. If the second account is debited, would it automatically mean also the VAT input will also be debited? Let's say, because let's say a rental or it was a different account, the second account was actually being credited. And now I also have to do the VAT input account. Would it also follow the second account and also be credited?
To make it easier for your question, sir, mention the accounts because we have them on the screen rather than numbering them. Let us say, for example, we credited 11,500 being the rental plus VAT.
Yeah.
And then when it came to posting the transactions to the ledgers, we debited the rental with 10,000 and then we debited VAT with 1,500. When you look at the rental amount plus the VAT amount, they together add up to 11,500.
Yeah.
Do you follow? So, meaning that we still have complied with the dual entry system of bookkeeping because these two accounts combined are equal to this single transaction on the credit side of the business side.
Perfectly makes sense.
Yeah.
Perfectly makes sense.
Do you get it?
I get it.
Yes. So it's not like the dual entry system has been left behind. No, we still have it. We simply are splitting, but the total remains the same.
Sorry, sir, can I ask?
Yes, you may ask, sir.
All right. I just want a clarity. This is a rental which has been paid. And then
Yes.
I think in the example which you have made earlier on, you said when you receive on the debit side, and then when you pay on the credit side.
Yes.
Now, looking at our rental ledger, if I'm calling it correctly, we see that the rental amount, which is 10,000, has been debited, and the VAT which we are paying has been debited, not other way credited. Can you please just explain what would have happened in that instance? This rental is credited. What happens when we receive a rent ourselves?
Your focal point is on the business cash book. Is on the cash book, where we say that when you receive, you debit. When you pay, you credit. And this is exactly what has happened. look at your business cash book. You have recorded on the credit side 11,500 for rental which you paid. And we say that this is inclusive of VAT. This money, 11,500, has gone out of your account. And in posting, you've opened an account for rent and another for VAT. And both these accounts have been debited. And the value of these debits is equal to the value of the credit on the business cash book.
Yeah.
So your focal point is on the business.
Sir, Mr. Mahave, maybe if I'm to assist, because it is my way of learning by assisting colleagues. As I spoke earlier, my colleague's answer was, if we were to own property ourselves, registered in our name as attorneys, and we were no longer paying, we were receiving. So probably, if I'm to be corrected as well, we will now register in our cash book, not a credit, a debit. If we were receiving, for an example, 10,000, inclusive of VAT, we will put it in a debit, that we have a tenant that is paying to us 10,000 inclusive of VAT, and we'll go through the same computations, the amount we've received multiplied by the VAT, which is 15 divided by 115, and then we will also now go into the rental account and credit it, including in the VAT. We will credit because we're now in possession of that VAT, unlike the 1,500 that must be paid to SARS. So if at your caprice, Your Honor, if you can show those computations and we can delete them afterwards so that my colleague is informed.
Let's simplify it this way. Let's simplify it this way. That is the opposite of what we are doing here.
Yeah, a different scenario.
Yes, it's a different scenario altogether.
Yeah.
Because here we are dealing with it on the basis that we are paying. We don't have our own office space. So I think his question, if I understand you correctly, sir, is on us being estate agents, renting property out, us receiving payments. In fact, this payment would not even have been reflected on the credit side of the business cash book, because instead of us paying out, it would be us receiving this payment.
It will be debited.
So that is a different thing altogether. We would debit the business cash book because money is coming in, and then we would credit either rental or the relevant tenant, because you can imagine how many tenants we would have if we are running that kind of a business. We would have accounts for those different tenants, which we would credit. So it means here, instead of rental, we would have Magabe being a tenant, or tenant A, tenant B, tenant C, and then credit them because they have paid us. And if there is VAT charged, then that VAT would not even be VAT input. Instead, it would be VAT output. We are charging it.
Yeah.
Do you follow it?
Yeah.
Okay. But let us not complicate it to that extent. Here, the understanding is that you are paying rent with VAT. Do you follow? But where the instruction is silent on VAT, you will not have this VAT account. It will simply be you crediting the business cash book and then debiting the rental account. And that will be the end of it. Is it making sense?
Yeah, it does.
Sir, I would like to have a question.
Yes.
I want to check now if in a question is always a VAT inclusive, it means you're always going to apply that formula of that 15 divided by 115 to 15 divided by 115 is to arrive at an answer.
Yeah.
It's always going to be similar formula.
Yes, you'll need to do that because there's a reason they tell you about VAT. They won't just mention VAT for sweetness. There's a reason they mention VAT. For instance, even in your fees, they may say you charge fees, make provision for VAT at 15% or at the applicable rate. So you need to know the rate at which you charge fees.
Okay.
Can I ask a question, sir?
I'll show you that.
I just need clarity.
Okay.
Yes, on the formula there, I can see
Yes.
the 11,500. Maybe just to take it categorically so. It is of the rent, this particular the 11,500. And this 5 times 15, this 15, I would believe it is the tax as per South Africa. Isn't
it is the rate at which VAT is
15%.
Come again?
You follow, sir? 15 is the rate at which VAT is charged. So in South Africa, VAT is charged at 15%.
Okay, that's great.
That is the rate. Yes.
Is the rate of 15 of times 15?
Yes.
I understand that. Now, this divided by 115, where is this 115 coming from?
115 is the 100. You are used to VAT being up, to percentages being up to 100, not so?
Yes. Yes.
Basically, the 100 that you are used to plus the rate at which VAT is charged. And what does that give you?
115.
Noted.
115. And you only use this if you want to determine VAT input.
Input.
Yes, only for VAT input. So if you are dealing with VAT output, it is 100. Let's say you are charging your client fees plus VAT, and the fee is 2,000, and you want to determine or add VAT. It will be 2,000 multiplied by 15 divided by 100. Do you follow? So if you want to determine VAT output, it will be your amount multiplied by 15 divided by 100. But if you want to determine VAT input, it will be the amount multiplied by 15 divided by 115. Is it making sense, sir?
Yeah, it's clear.
Okay.
Okay, is this 15 a constant?
Yes.
Yes.
It's 15%.
It's 15% of check.
Yeah, it's constant.
So VAT output is more like calculating normal percentage, like normal percentage.
Yes.
By
Yes.
110.
Yes.
Or...
Yes. Yes. Can we take another example? This will be the last example of the day.
Okay, one example will be you as a firm, you pay or buy airtime for $20 to call a client. Your existing client, let's say, is it Varaya? You call Varaya with your money. You buy airtime for 20 rand to call him to make an appointment. I'm saying you buy airtime for 20 rand to call by Varaya.
Yes.
Yes. So how will you input that in the records? Is it gonna go out of business or trust? The $20.
Yeah, but what is the nature of a transaction is that? it goes back to our introduction, sir. What nature of transaction is happening there?
You
money there.
No, you're buying airtime to call Varaya, one of your clients, to make an appointment or to inform him about something.
Yeah. So do you know that calling clients is a service that you are rendering?
Yes.
And you are rendering that service in business, not so?
Yeah.
And in your fees, you are going to charge for that service.
Yeah.
And your fees will be charged in business. But it's okay. We will deal with many examples around that aspect later. We'll deal with many examples around that when we proceed with the course in the succeeding days. Can we take this one example quickly?
Yes, please.
Yes, sir.
Yes, please.
On Tatana's matter, you issue summons and charge 300. You issue summons and charge 300, and you are a VAT vendor. When you charge fees, you need to ask yourself this question. Am I receiving money at this stage, or am I making a payment? Where do I record this transaction? Do I go to any of the cash books, or do I record this transaction elsewhere?
Elsewhere.
Elsewhere.
Yes.
Why elsewhere and not here? And not on the cash books?
You're not receiving money and you're not paying money as well.
Exactly. And remember when we started, I said that you only use the cash books when there's a flow of cash. You only use the cash books when there's a flow of cash. If there's no money either coming in or going out, you do not use the cash books. You only use the cash book when there is flow of cash. So in our example here, there's no flow of cash. So instead of using the cash books, you will use what is called a journal. A journal. A journal is a book used for non-cash transactions. You use a journal to deal with non-cash transactions. In other words, transactions which do not involve the flow of cash are recorded in a journal. Transactions which do not involve the flow of cash are recorded in a journal. So this is what you will do. You will need to identify the relevant journal to be used here, because there are different types of journal. So you need to find out which of the journals to use. And the choice of a journal depends on the nature of transaction that you are dealing with. In our case here, we are dealing with an instance where we are charging fees. So because we are charging fees, the relevant journal we are going to use is called a fees journal. We are going to use a fees journal. Right. When you record fees on a journal, you must do the following. Number one, always credit fees and VAT. If you are a VAT vendor, your fees must always be credited and debit your client. Always credit fees and VAT. If you need to make provision for that, and then debit your client. In our case here, who is our client?
Tatana.
Done. So we will record here, done. If you like, you can still use this table the way that this table is. So we'll have Tatana, we'll have fees, and we'll have VAT. So we say that you must always credit fees. How much is our fee? 300, you see. We record it on the credit side. We record it on the credit side. And our VAT is, what is our VAT? You multiply the amount by 15%. How much is it? How much?
45 rand.
For fun.
45 rand.
Yes. So we add our fees and VAT. And what do we?
345.
345.
345.
Which we debit. So for your easier understanding, I will record these in this layout. We can use the same layout where we simply say here, fees journal, particulars, debit, credit, particulars, debit, credit. And then we have those items there. You have Tatana, you have fees and VAT. Fees and VAT are credited. Fees and VAT are credited, whilst the client is debit.
And we're done.
And we're done, yes, that is so. Tell me if this is complicated for you.
Not really.
No, sir.
No.
No. And then below here, you narrate, you give an explanation, and what do you say? Summons fees, plus VAT at 15%. Do you follow?
Yeah.
Yes. Sum on
Yes,
fees
sir.
at 15%. Is it making sense?
Yes.
Yes, sir.
Right.
So on this one, do you use the 100% instead of the 115?
Yes, because this is VAT output. This is where you are charging the VAT.
Thank you.
This is where you are charging the VAT. So it will be 100. So there's a rule that requires that.
Sir,
Yes.
yes, I wanted to know with regard to the reasoning that you give for fees and VAT. Is there a particular place, because even looking to this diagram that we are using, there is
You're
nowhere
breaking.
it shows where you wrote that
You're breaking, sir.
someone the reason for paying. Yes.
You're breaking, sir. I did not get your question.
No, I was just asking whether is there a specified column where we can write the reason for like fees and that, where you were saying paying for fees.
A specified column.
When you
This is
said
where we have
state.
This is where we have recorded, sir. Do you see the first column on the particulars? Sir, do you see my screen?
No, I wanted to know about that one for fees and someone. I see it now. It wasn't appearing there.
Oh, yeah, I
It was
think
at the bottom actually.
you have network problems, sir, because even as you speak to me, you are breaking.
Okay.
Okay, so as the name also explains, this is a journal. It's a fees journal. Do you follow? It's a fees journal. So we have a principle which says
yes.
Every time you make use of a journal, you must also post to ledgers. You must also post to ledgers. In other words, you will have to have an account for Tatana in business, an account for fees, and for VAT. So that is what we must do now. We can first go to our business set of books to see if we do not have an account for Tatana in business, an account for fees, and an account for VAT. And as we scroll up here, we can't find an account for Tatana in business. What we have is an account for Tatana in trust. Do you see?
Yes.
But we cannot record fees in trust. We record fees in business because we render services in business. Do you follow? We render services in business, and the fee journal is part of our business set of books. It is happening in business. So we will have to have an account for fees, for Tatana in business. We'll say here, Tatana in business. And then we'll have to have another account in business fees, which we will simply name fees. We know that fees are always in business. Fees are always in business. Lastly, we will have an account for VAT. We'll have an account for VAT output. We'll have an account for VAT output. So here's the thing. When we post transactions from a journal to ledgers, we do not change anything. What is debited remains debited, and what is credited remains credited. What do we mean by this? Let's go to our fees journal. We will see our first account on the fees journal is Tatana. Tatana is debited with 345. What it means is we must go to Tatana's ledger in business and record Tatana. Tatana, and then debit 345. Debit 345. And then we go to the fees account. You will see that the fees account here is credited with 300. So we do the same thing. We don't change. We go to the fees account. We record Tatana, and we credit 300. We credit 300. In fact, here on Tatana in business, the clearest way is to simply say fees plus VAT. This is the clearest way of narrating under Tatana in business. So you say Tatana in business under particulars, fees plus VAT, 345. If you like, you can also say summons fees plus VAT. And then under fees, on particulars, you will say Tatana, and then on the credit side, you record 300. And then you go to VAT output. Under particulars, you'll have Tatana. And then you will credit 45. You will credit 45. So this way, you have recorded fees. But this does not mean that you have been paid. What it means is that you have done some work so far, and the work you have done entails the issuing of summons, and you've charged a fee of 300 plus VAT for this particular service.
Sir,
Yes.
is it possible to just record the VAT in the other account that were opened above? Because it will still credit it as output. Or must you open another? Because we didn't specify that it was input in the other one.
Which one? The first one?
Yes.
You're saying, is it possible to do what?
To put this VAT output in the other VAT account.
Oh, yes, it's possible. Yes, it's possible. You can simply come to this VAT account and record it on the credit side.
Noted. Thank you.
Okay. Are you here? Do you see what I'm doing here? Just below business cash book, do you see?
Yeah.
I can say Tatana. And instead of debiting, I'll credit.
Credit, yes, yes.
And say 45. Do you see?
Yes,
so it's possible to do this because by crediting here, it means it's VAT output.
Yes, and debit would be the VAT input.
Exactly. It's possible. It's possible.
Sir, you mentioned that every time you use a journal, you must also use a ledger. So I believe this is the ledgers.
Yes, these are the ledgers. Yes.
Okay.
So this one journal or this transaction on this journal has given birth to 3 ledgers. Do you see?
Sorry, sir.
Yes.
Yes. Sorry, perhaps to be repeating myself, but I'll just need just a quick summary in terms of that journal part that you started in entering those entries there. I understand with the other ones in terms of the Tatana in business, the fees, as well as the VAT output one, in terms of how they are allocated. But if you can just quickly summarize in terms of how we arrived on those numbers there on the journal itself.
Okay. On Tatana's matter,
yes,
we began rendering a service. And the service we rendered so far is the issuing of a summons. And we charged 300. And we need to make provision for VAT at 15%. And we looked at the 300 plus VAT that we need to charge and asked ourselves whether or not it is money we are receiving. And the answer is that we are not receiving money at this stage. Neither are we making any payout. So the result is that there's actually no flow of cash here. And because there's no flow of cash, we will not use the cash books. We will not use the cash books because the cash books are used only when there is flow of cash. So because of this, we will have to use a book that deals with non-cash transactions. And that book is called a journal. A journal uses non-cash issues or transactions, or it records non-cash transactions. And the specific journal we are going to use is the fees journal, because we are dealing with. So when we record, we need to always credit fee and VAT where we are VAT vendors and debit our client with the fees plus VAT. Or where we are not VAT vendors, we simply credit fees and debit our client with the fees. And this is why we opened the fees journal here, and under particulars, we recorded Tatana being our client. And then we also recorded fees, which we are charging, and the VAT that we are charging. So we started with fees because we know how much we are charging for issuing summons. And we said we charged this specific client 300 for issuing summons. We credit this 300, it's a fee. We determined VAT on the summons fee. And our VAT at 15% is 45. We credit this 45. From here, we add the fees to the VAT. And we get 345, which we debit our client with. The reason we are debiting our client here is that we have rendered this service for our client, and our client now owes us for this service that we have rendered. And then we need to explain this transaction. And how do we explain it for somebody to understand? If somebody were to look at our books of account, which way will make them to understand? And we said, summons fees plus VAT at 15%. So from here, we post these transactions to ledgers. We post these transactions to ledgers. And which ledgers are we posting to? These are ledgers reflected in the journal. Tatana, fees, and VAT. And because of this, we then had to open an account for Tatana in business, an account for fees, and an account for VAT output. Does it make sense for everyone? And in posting the transaction,
thank you, sir.
Yeah, it makes sense. It makes sense.
Thank you. So when we post, we don't change anything. What is debited remains debited. And what is credited remains credited, even on the ledgers.
Sir,
Hello, sir.
can I get, so ledgers are only for posting. Nothing changes.
Yes, nothing changes. You are just posting.
Sir,
Yes.
Precious asked if you can record this as a PDF. She wants a PDF of this document. If you can attach it under study material on the e-leader.
Not a problem. We can try that. We can try that. All right. Any other question?
Yes.
think the time.
Sorry, I joined a bit late.
Hello.
So I just wanted to know where the exercise is that we are dealing with now.
Fees, yes. We're dealing with fees now.
Where is the exercise from? Sorry, I joined a bit late, just slightly after 7:30. So I'm just catching on.
No, they
Where
said,
is the exercise?
yeah, the exercises given to you are said to be not opening. So these we were just discussing.
Okay.
Oh, okay.
Do you
So
hear
it
me
is
now?
not. Okay.
It's not part of the exercises sent to you because somebody said in the beginning of the class that the exercises sent to you are not opening. So we were discussing
Oh,
this.
noted. Thank you.
Yes,
Oh, because maybe okay. Can I come in?
you may.
Yes, maybe the confusion might have come the way you ushered the cash book and others as we were coming, jumping to the fees journal and the ledger. I think it became a bit confusing. Specifically on not ushering them into explaining actually what are they and so on. Maybe I would have I thought I'm the one who missed that maybe because I couldn't understand when we get to to leisures that were discussed and those type of things. So I think maybe it was going to be proper to maybe explain what are the leisures, what are the journals, and what happens then. Then you usher them as you usher the cash book, so that you can be able to understand them properly. And maybe also considering the time, I think my concentration level also is deteriorating. But I'll hear from.
I can explain that to you, sir, if you give me permission.
No, I don't.
I think
Let the lecture explain.
I think the issue has been with your concentration levels, as you put it, because when we took another example, I did explain to you that let us say that you now render a service to your client, Tatana. You render a service to Tatana by issuing summons. And when you issue summons, you charge 300. And I said to you that when you charge fees for services you are rendering or for services rendered, you are not receiving any money, neither are you making any payment. And because of this, you will not go to any of the cash books because the cash books are used only to deal with cash transactions. But you will make use of a book that is used to deal with non-cash transactions. And that book is called a journal. A journal does not record cash transactions. Instead, it records non-cash transactions. Issues where there is no flow of money or flow of cash. There is no payment you are receiving or payment you are making. And we even said for this specific transaction, you will make use of a fees journal, because this is a journal specifically designed to deal with fees. And then we went to show how a fees journal looks like. All right.
Well captured, sir.
Okay. Any other issue? We are wrapping up. We're closing.
Sir, just a comment. If maybe you can lead us as to like what we'll be covering tomorrow, maybe just give us some topics so that we can prepare or something like that.
All right. On the exercises given to you, tomorrow we will deal with correspondent accounts. So you can simply just go through the section on correspondent accounts in your manual, and then also look at the notes given to you or posted on eLeader. We will discuss that tomorrow when we meet. Is it making sense?
Thank you, sir.
Yes, sir.
Thank you very much.
Yes, it does.
Yes, sir.
All right. All right. Good night.
Yes. Thank you, sir. Bye.
Thank you so much. Good night, sir.
Thank you.
Say bye.
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 Bye, sir.
Bye.
Such a good explanation.
Bye-bye.
Bye.
Goodbye.
Tot on.
The mighty lions laugh.
Bye-bye.
For a Christmas laugh.